Hi, I'm Michael Yardney, and today I'd like to have a bit of a chat with you about what's in store for our property markets for the rest of the year. And I'll explain a bit about what property investors should do, shouldn't do, and what they should watch out for. Because you see, we're living in interesting times, aren't we? The media is once again obsessed with fear and gloom. Look, you just got to open up any paper, turn on the news, and you'll see the worry list for investors. It's blown out again to include things like the global economy, European debt problems, US housing, Japan, and much, much closer to home, of course, the problems or potential problems with our property market. Now, depending upon where you live, property in your state would have grown a few percent or dropped a few percent, but that's overall. Of course, we know that the value of certain properties fell much, much more than that, and others have actually gone up. Some segments of our property markets, though, in particular holiday properties, mining towns, and some regional properties, have dropped markedly in value. And when you're opening the papers and looking at the news, bad news is abundant. So what's in store for our property markets for the rest of the year? And does the fear that's overhanging our investment markets mean crisis or opportunity? Well, before I discuss that, I want to remind you that if you want to build your own successful property investment business, if you'd like to grow a substantial property portfolio, you really need to treat it like a business, then I really urge you to get my new book, What Every Property Investor Needs to Know About Finance, Tax and the Law. I've written this with three leading experts, Rolf Schaefer, Ed Chan and Rob Belander, each experts in their field, as we teach you how to build your own property investment business by understanding the system and making it work for you rather than against you. And you can get this book by just clicking on the link down below. Now, back to our question about what's happening. You see, at other times, our flat property markets would have been a terrible result. But against the backdrop of what's happened to property markets around the world, and in fact other investment alternatives, the way our property markets performed over the last year or two isn't actually that bad, is it? Now, sure, things are tough in some regions, and I'm not pretending this year will be easy. It won't. But it'll definitely be a year of opportunity. It's another year when the gap between the rich and the ordinary Australians is going to widen. Now, before you say, oh, Michael, you're not going to again recommend buying property, are you? Let me remind you, and I'm sure you've witnessed this phenomenon yourself. Some investors seem to do well in good times and do even better in tough times, while others do poorly in good times and even worse in tough times. So why is this so? Well, quite obviously, if they consistently do well overall, even in those markets where others dismally fail, it must be something special internal about these successful investors, something within themselves that makes the difference. If you've been to any of my seminars, you know that I believe it's an individual's mindset more than any other external market force which determines their success. Some investors are going to do very well in property over the next few years because they can filter through all this clutter of mixed messages. You see, while many will just sit on the sidelines waiting to get better, waiting for things to get better, a small group of savvy investors out there are already taking advantage of the opportunities the markets are presenting. Look, I recently reviewed the house price statistics in the last 12 months in Brisbane, a market that many would say has been very, very flat. Interestingly, in a year where the overall growth in median prices was negative, there were quite a few suburbs that experienced an increase in median prices of around 15%. And you know, some suburbs, ones in fact that we bought some properties in for our clients, grew by 20% or more. And it's the same when you drill down the statistics in Sydney and Melbourne markets, and in fact in most markets. As you can imagine, some of these high growth suburbs were the ones we targeted for our clients at Metropole over the last year or two. But of course, not all properties in these top performing suburbs increased in value to that extent. You need to know the right type of property to look for. Now, by the way, there were just as many suburbs where the median price fell well below 10%, again showing that you've got to be very, very selective in this market. Look, in the previous few years, during the strong property markets, even inexperienced investors did well. So did the speculators and the foolhardy. It seems everyone can make money from property at the top of a cycle. But our property cycle's clearly moved on, and the market conditions have changed significantly, which has seen inexperienced investors, or those who didn't stick to strong property fundamentals, find themselves in trouble. Now, there's no surprises there. This happens every cycle. So you may well ask, if I'm suggesting you should consider buying properties, does that mean the property market has bottomed? And honestly, I've got no idea. But the answer is probably not. But my question to you is, are you buying the market? And clearly the answer is no. You're investing in a property or a small number of wisely selected properties. This means that for astute investors, there are some incredible opportunities around. There are currently quite a few motivated and at times desperate vendors out, and this creates some top buying opportunities for long-term investors. I know that at Metropole we've bought some real great properties and some at some very good prices for clients in the last few months. By the way, just in case you didn't know, the team at Metropole don't sell properties, yet our buyers agents have access to every property for sale. We represent the purchaser, both home buyers and investors, and help them research, negotiate and acquire their properties. Interestingly, many of these are currently silent, off-market sales. So in turbulent times like this, where there's all these mixed messages, you need sound, independent advice. Whether you're a beginning or an experienced investor or a home buyer, there's no one quite like the team at Metropole to help you. Our property strategists could point you in the right direction. So why don't you come along to one of the free boardroom briefings in Melbourne, Sydney or Brisbane? Click on the link below and we can tell you a bit more about how to attend those. So back to the question, has the property market bottomed out? The answer is probably not. My view of the property market could be summed up simply as follows. Number one, I have a very strong positive view on the property markets in most of our capital cities in the medium to long term. But number two, I'm certainly aware of the potential short-term problems related to the lack of confidence in the economy, to affordability issues, and mainly, I guess, to poor market sentiment, which means, number three, you should look for properties at the right price, in the right location, with the right sort of rental income. A property that you'd be happy to hold in your portfolio in the long term that's bought sufficiently below its intrinsic value so that even if the market fell a bit further, you'd still have bought well. Now, just to make things clear, my strategy for this time in the cycle is to continue what I've been talking about and what Pam and I have been doing personally, and my business partners have been doing personally for years. That is, buy the right type of property, one that's got some element of scarcity, which will always make it appealing to owner-occupiers, because they're the ones who push up property values, and also a property that's obviously appealing to tenants. Number two, buy at the right price. Currently, this is what I say below intrinsic value. The type of property that even if the price has dropped a bit, you'd still be covered. And number three, buy in an area that's always outperformed. And look for a property with a twist. For example, a property to which you could add some value. See, in times of flat capital growth, as we're experiencing, you should manufacture some capital growth through renovations or redevelopment. Now, I started this update by asking you the question, is this an year of crisis or opportunity? Well, I think that in a year or two's time, today's property markets, when they're looked at with the bright light of hindsight, well, you're probably going to say, you know what, I wish I bought some more properties at those prices. So I'd like to ask you, are you ready to exploit the opportunities that are going to arise? I'm going to keep you updated on how the markets are going in these regular market updates, and it's probably worth reminding you that in changing times like this, there's no one quite like the experienced, independent property investment strategists at Metropole to help you. Remember, our multi-award winning team have no properties for sale, so their advice is independent and it's unbiased. If you want to find out a bit more, why don't you come along to one of our briefings? We'll show you a bit of our research and what's happening in your local state. So click on the link below and reserve your place. But because so much is happening in our property markets nowadays, I'm going to also keep you updated, apart from these regular fortnightly updates, with a short post in my blog. So just click the Michael's blog link at the top menu item up here. That's a different subscription to my regular newsletter, and it gives you my short daily updates. Look forward to sending those to you and my next property market update in 2 weeks.